Hello, everyone, and welcome back to another episode of Market Brief After Hours. It's been a whirlwind of a week so far, with geopolitical headlines flashing red, while economic data tries to paint a picture of resilience. Today, we are breaking down a Wednesday session that saw Wall Street finally find its footing, shaking off a three-day slump, even as tensions in the Middle East simmer in the background.
That's exactly right. It was a fascinating day of trading because you really saw that tug of war between fear and greed play out in real time. On one hand, you have the escalating situation involving the United States, Israel, and Iran, but on the other, investors seem to make a collective decision to look past the immediate geopolitical noise and focus on the fundamentals, specifically stabilizing energy markets and some very encouraging data on the U.S. economy. It's the classic climbing the wall of worry scenario.
Let's start right at the top with the major U.S. indices. It looks like the bleeding stopped, at least for now. How did the numbers shake out by the closing bell?
It was a solid rebound across the board. The Dow Jones Industrial Average finally snapped that three-day losing streak. It climbed about 238 points, or roughly 0.5%, to close at 48,739. But the real energy was in the broader market and the tech sector. The S&P 500 gained 0.78%, finishing right at 6,870. And the NASDAQ Composite, which had taken a beating recently, led the charge. It jumped 1.29% to close at 22,807.
So the NASDAQ outperformed significantly. Was this just a general buy-the-dip moment, or was there a specific catalyst driving technology shares higher?
It was a bit of both, but the semiconductor sector was doing the heavy lifting. We saw investors rotating back into growth names, specifically those tied to the AI infrastructure build-out. You had major players like Micron Technology and AMD jumping more than 5%. Broadcom and NVIDIA posted solid gains as well. The narrative there hasn't changed. The demand expectations for AI are still sky high, and that overpowered the geopolitical jitters for the day.
Speaking of those jitters, oil prices have been the big wild card this week. We saw a massive spike earlier, but it seems like things calmed down on Wednesday. What happened there?
That was the key to the market's relief rally. Earlier in the week, WTI crude had surged after airstrikes raised fears about the Strait of Hormuz being blocked. But on Wednesday, we saw prices stabilize. West Texas Intermediate rose just over $1 to settle at $75.63, and Brent crude ticked up slightly to $82.39. The catalyst for the calm was a commitment from the U.S. administration to ensure tanker traffic continues through the Persian Gulf. That assurance helped ease the fear of a massive supply shock, which in turn allowed equity investors to breathe a sigh of relief.
It's amazing how sensitive the market is to those shipping lanes. Now, while the U.S. was recovering, I understand it was a very different story in Asia, specifically South Korea. We saw some historic numbers coming out of Seoul.
Historic is the right word, but for the wrong reasons. South Korea's markets absolutely collapsed. The Kospi index plunged 12.1%. That is its most severe single-day decline on record. It was so intense, the exchange had to trigger temporary trading halts. The tech-heavy Kosdaq was even worse, ending 14% lower. You had giants like Samsung Electronics and SK Hynix dropping 10 to 12%. It was a brutal session, driven by those same geopolitical risks we mentioned, but the reaction there was much more visceral than what we saw in the West.
That is a staggering drop for a major economy. Was the rest of the region just as bad?
It was negative, but nothing like Korea. Japan's Nikkei fell about 3.6%, and Australia retreated nearly 2%. China was also soft, with their manufacturing PMI missing forecasts. However, if we look over to Europe, the mood was actually quite buoyant, mirroring the US more than Asia. The Stoxx 600 climbed 1.4%. We saw the Spanish IBEX surge 2.5%. And even with some diplomatic friction regarding threats from the US, the economic data in Europe was surprisingly good. Eurozone unemployment hit a record low of 6.1%, and Germany's PMI hit a 4-month high. So Europe is showing some real grit here.
It really highlights how disconnected global markets can be on any given day. We're going to take a quick break, but when we come back, we'll dive into the U.S. economic data that's fueling this optimism, take a look at the crypto surge, and break down the technicals in the Forex market. Stay with us. Welcome back to Market Brief After Hours. Before the break, we talked about the stock market rebound, but underpinning that move was some fresh economic data here in the U.S. What did we learn about the economy on Wednesday?
We learned that the soft landing or no landing narrative is still very much alive. The ISM Services Index for February came in at 56.1, which was well above expectations. That signals strong expansion in the non-manufacturing sector. Crucially, the prices component eased, which is exactly what the Federal Reserve wants to see: growth without runaway inflation.
And I noticed mortgage demand is picking up again, which seems surprising given where rates have been over the last year.
It is picking up aggressively. Mortgage applications surged 11% week on week. The average 30-year rate held at 6.09%, which is the lowest level since 2022. That triggered a wave of refinancing. Demand there jumped 14% and is up over 100% compared to a year ago. It shows that there is a lot of pent-up demand on the sidelines, just waiting for rates to tick down even slightly.
Let's shift gears to the digital asset space. It feels like we haven't talked about a massive crypto rally in a few weeks, but Bitcoin is making headlines again.
Crypto is definitely back in risk-on mode. Bitcoin surged roughly 8% in just 24 hours, climbing briefly above $74,000 for the first time in about a month. Ether was up over 9%, trading above $2,200. We even saw the meme coins flying. Dogecoin jumped more than 15%. A lot of this is being attributed to renewed risk appetite, but there was also a catalyst from Washington. President Trump voiced support for legislation to create a clearer regulatory structure for digital assets. The market loves certainty, and Coinbase shares popped about 15% on that news alone.
Now, for our listeners who track the currency markets, let's get into the technicals. We are seeing some interesting setups in the major pairs. Let's start with the euro against the dollar.
The euro is really struggling to gain any traction. Euro/USD closed at 1.1641. It was up slightly on the day, but if you look at the charts, the structure is weak. The price remains below all the key moving averages. You have the 50-day simple moving average at 1.1772, the 100-day at 1.1696, and the 200-day at 1.1668. When price is stuck below all three of those lines, they act as dynamic resistance. Every time the euro tries to rally, it hits those ceilings and gets sold off. It's a clear corrective phase.
Is the British pound seeing a similar pattern?
Very similar. GBP/USD closed at 1.3378. It's also trading below its 50, 100, and 200-day moving averages. The 100-day SMA at 1.3398 is acting as immediate overhead resistance. Since peaking in late January, the pair has just been making lower highs and lower lows. Unless it can break back above those averages, specifically that 200-day SMA at 1.3446, the bears are still in control.
But the Aussie dollar seems to be telling a different story.
Completely different. The AUD USD is the outlier here. It closed at 0.7078, and the chart looks bullish. The price is comfortably above all those key averages. The 50-day is at 0.6903, and it's sloping upward, which reinforces the trend. The recent dip we saw looked like a healthy consolidation, and now it's bouncing off support. As long as it holds above that 0.6985 level, the bulls are in the driver's seat.
Briefly touching on commodities before we get to individual stocks, gold continues to march higher.
Gold is a runaway train right now. It closed at $5,133, up nearly 1%. It's trading well above its 50-day SMA of $4,827. The structure is classic bullish behavior: higher highs, higher lows. Silver, however, is lagging a bit. It closed at $83.17, but is still stuck below its 50-day SMA of $84.60. It's facing some selling pressure after getting rejected near recent highs, so we might see some consolidation there while gold pushes on.
Let's wrap up with the market movers, the individual stocks that made big waves today. Who were the winners and losers?
On the positive side, Moderna was a standout. Shares surged 16% after they announced a settlement regarding some patent disputes. The market loves it when legal clouds clear up. We also saw CoreWeave, which is big in the AI infrastructure space, pop nearly 8% after securing a massive new partnership.
And on the downside?
It was a tough day for GitLab. They dropped more than 6% after their revenue guidance for the coming year missed analyst expectations. Wall Street punishes weak guidance instantly. Webtoon Entertainment also took a hit, falling over 9% on a quarterly loss. And interestingly, Brown-Forman, the spirits company, dropped 6% despite reporting strong sales. Sometimes even good news isn't good enough if the broader sector sentiment is weak.
It really does come back to expectations versus reality. So as we look ahead to the rest of the week, the focus remains on the Middle East and whether this economic resilience can hold up.
That's the key. Investors are monitoring the oil flows and the headlines. As long as the U.S. economy keeps printing numbers like we saw today, strong services, decent employment, the market seems willing to tolerate a certain level of geopolitical risk. But as we saw in South Korea, that sentiment can turn on a dime.
We will be here to track it all. That's all for today's deep dive. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform so you never miss an update. Thanks for listening, and we'll catch you tomorrow.